The following is a presentation of TFNN. The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the December 4th terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. Markets are pretty flat here, except in the metals market. So let's go take a look at one of our tools. We'll come back to the markets. I love this tool. This is a great tool, folks. This tool is called Holding Onto Grievances. And holding onto grievances is a decision to suffer. Sorry, the little slur there off of my tongue. Now, let me tell you a story. It's a story about a farmer that for many years, folks, an old farmer, he plowed around this rock that was in one of his fields. And as each year passed, he grew more and more upset about this rock. In fact, it had broken a couple of plows, a cultivator, and quite frankly, it took up some really valuable land. Now, one day, the farmer decided that he would dig out the rock. So at first, he took that standard tool, a crowbar, stuck it underneath the rock, tried to jiggle it loose. He slid it underneath it, only to find out that the rock was really only about 1 foot thick at the base of it, at the bottom of it. So he loosened it more, and he found out that he was able to loosen it enough that he could haul it away with his wagon. How about that, after all those years? So he hauls it away, and the farmer smiled, and he was thinking to himself, all through the years, this rock had really haunted him. And he began to think, what else might there be in his life? What other areas of his life was he holding on to with similar thoughts? Similar thoughts and feelings that were like rocks in the middle of his mind field. Not minefield, his mind field out there. So one by one, he began to take his past experiences, reflect on them, and then follow through with whatever appropriate action was necessary to remove those rocks. In other words, he would just simply lose those negative thoughts and let them go. Something to think about. Now, some of us may choose to hang on to old painful thoughts as though they were treasures. Folks, I can guarantee you they're not treasures. I say bury those types of treasures. Good riddance, after all. They just simply blur your ability to see the good that comes from even difficult situations. And each of us, I know each of us have been through or are going through or will go through difficult situations, so it's always good to have a good strategy out there. Granted, each of us, have had difficult times, painful situations. However, it's unnecessary, folks, to remain locked in negative thoughts, for we alone, folks, this is the cool thing. We have got the power to control our thoughts out there. The Dalai Lama out there, he speaks of the word of forgiveness in his book, Freedom of Exile, and he goes on to say, learning to forgive is much more useful than merely picking up a stone and throwing it at the object of one's anger. For it is under the greatest adversity, folks, that there exists the greatest potential for doing good, for both yourself and for others. A mind, folks, that is occupied by positive thoughts blossoms like a beautiful garden, free of the weeds of negativity. Whether your mind portrays a beautiful garden or a weed patch, it's really up to you. Let's go take a look at the beautiful garden in these markets out here. Right now, as I said, things relatively flat. You've got the Dow futures off about 5 points. The ES Mini trade out at 1406. That's down about a point out there. The NASDAQ futures off 3. Russell 2000 flat. But let's go take a look at gold, and we'll take a look at yesterday's markets as well. We'll look at gold and silver. Why gold and silver? We got King Dollar here is back 21 pennies, trade out at 79.65. Gold, however, down 27 bucks right now, 1.5%. Silver leading the charge, down 2 3/10% off 78 cents. Platinum also down about 2% off 29 bucks right now. Let's take a look at gold. Gold right now coming into the last area where it reversed, which was on November the 5th out there. That low is 1672.50. That is the target area for gold. It is not oversold. We're looking at the daily chart. If you are watching us on Tiger TV, maybe you're listening on your mobile device or one of the radio stations that picks us up. We absolutely appreciate you listening that way. You can always catch an archive of this show on Channel 9 out there. That way you'll be able to take a look at the charts that we have here. So what you will see is gold is headed down to that swing point from November 5th, anywhere from the 1672 to 1686 level. It's at 1694. So far today, the low has been 1692.60. So we're not that far off of the lows out there. What happens when King Dollar gets strong out there? Because the king is weak right now. You know, as I say, back 21 ticks out there. Gold is getting ready to correct, a larger correction than most are thinking out there. In fact, if you do take a look at A to B equals CD down patterns out here, your A point would be the high. Let's choose the high here of October the 5th. So let's go ahead and we'll form the actual A to B equals CD. The high there on October 5th, 1798.10. Your B point, you know, that's the swing point that it's headed for right now. We'll see if it can take it out. That would be your November 5th low, 1672. Your C point up here would be the high on November 23rd out at 1755. 1-to-1, 1629. But gold will do more than a 1-to-1 A to B equals CD down if it can take out that B point. It'll do a 1 to 1.272. Most likely get you back into the 1595 level. What will it actually be doing? Gold will come back and it will test that trend line. Once you break a trend line, this is a doozy. You know, this is a trend line that goes back to September in 2011 when gold was trading out at that 1923.70. And so it broke that trend line. That's a very bullish sign out there. Usually, almost always, not always, but almost always, when price breaks through a trend line, it somehow will find its way back. Looks to me like that's what gold is trying to do. But its first stage here, first stage is really breaking through the swing point from November 5th out there. Let's go take a look at silver, high-ho silver, see what silver here is doing this morning. Again, as I said, back about 2 4/10%, trading out right now at 32.96. Silver taking on the most recent swing point low. Silver, again, has been stronger than gold. That swing point low most recently was that November 28th level at 32.90. 64,000 contracts on the continuous, 25,000 so far this morning. 60, as I said, it was 32.90. You're at 32.96 right now. It did get down to 32.86.50. If it breaks that area, its next stops are going to be the swing point from November 16th, that low of $32 and looks like a penny, maybe 2 pennies, and then back to November 5th out here. That low would be $30.65. 1 day at a time. Silver has much further to run. It is not even close to the oversold condition. You can see as silver here made its move up and was getting into the 70% range of that relative strength indicator, it was giving you the signs that it wanted to make a turn. Of course, you got that bearish engulfing candle on the 30th. Last Friday out there, you had a little bit of a bounce in silver yesterday. Wasn't good enough to erase that bearish engulfing candle. You got follow through today in silver. What happens, folks, when King Dollar starts to move to the upside? Right now you got the King back 20 cents, and that's all about the euro. We'll certainly take a look at the euro today, but the euro is going to be getting ready to turn here, and we'll see if we get that signal today. Tomorrow it's getting ready to turn. When it does turn, folks, you will start to see these metals really haul butt to the downside. At least that's the way that it should work out. But we'll take things 1 day at a time. Let's go take a look at the markets closed down yesterday, reverse direction. As you know, when we left here yesterday, I said pay attention to the DAX. I gave you the parameters on the DAX, so let's go over and take a look at the DAX. Right now, the DAX is off about a buck here, but it was really yesterday's message that was out there. I just have to find where I put that thing here. Where is it? Come on. Where did I put that? Somebody knocked me upside my head here. There we go. Okay, it's right in front of me. I just have to really open my eyes. So we're taking a look at the DAX. One of the things yesterday that we were noticing was, number one, we had a reversal candle on Friday. That was the shooting star. The high of that candle was 74.4260. I said, look for a close below 74.4260. What did you get? You got a close yesterday, 74.3521. Bingo! That qualifies. So there's one of your, so even though you had a move yesterday and it was on lighter volume, it was really a beautiful setup, quite frankly, because what the DAX did was it went up and it tested the swing point high. I mean, that's really a beautiful situation. That swing point was September 21st out there, 74.7853. The DAX got over that yesterday, got up to a high of 74.8789, closed back, not below the low, but closed back above the high, closed inside the shooting star out there. It's an area where we've had a area of resistance. That's this little black horizontal line. You need to be a little bit flexible to be able to move it up and down. You're really looking for a general area. We never try to buy or sell the top or the low tick out there. It's not that you can't do it every now and then. I've done it a handful of times out there, but it doesn't make you any better trader. In fact, it'll make you wacko. So you don't want to do that. You want to make sure that you're looking for a range. You want to make sure that you got wide enough stops when you trade out there. Don't make it more difficult on yourself than you already do. If you do, that's like a big rock. It's like that farmer had a rock in his field. If you're trying to buy the bottom tick, or sell the top tick out there, that's one of those rocks that you need to get a crowbar out, 2 crowbars, get rid of them, because that is just, that'll drive you batty. So we got all the parameters that we needed. The DAX gave us a reversal signal. Really, we're seeing that today. It didn't want to, the question was, were we really believers here? As you can see, it tried to push higher earlier in the trading session. The DAX here just wants to pull back. Right now, the DAX wants to pull back to this rising trend line. That's really not that much. It's just a couple hundred points down. 877-927-6648. Reversal candles all over the place yesterday. We'll go look at them when we come back.
Yeah, it's always better when we're together.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. Let's, as we were going around the world, we were over in Germany. Before we went to break, you have the FTSE up a buck here right now. Last night over in Asia, the Nikkei was traded down 25 bucks out at 94.32. That's what I've got up on my screen here right now. Now, the Nikkei giving two sell patterns here, both a Gartley sell pattern, a 0.618 Gartley sell pattern. If you're asking what that is, when we say when I use 0.618, it is nothing more than a retracement. This is a ruler that is really available on most every trading system out there. The ones that you want to have on the set on your ruler system are 0.382, 618, and 0.786. 0.382 really helping you to understand the trend. The ones that you want to trade off of are 618 and 786. If you go from the high in the Nikkei, I'm using the March 27, 2012 high out there at 10,255, all the way down to the low that was put in on June the 4th out there. If you go from high to low, I'll go ahead and actually do it for you if you're following along on Tiger TV. So I'm going to go from high to low. And so, in essence, price traveled to 61.8% of that entire move. That's this little red line going across here. That would be the exact number. Looks like 94, 84, 97. Of course, we don't try to be exact. We're looking for the range here. As you can see going across the screen, it was almost exact anyways, but close enough in my work here. So it was a 0.618 Gartley sell pattern that's set up here on the 26th of November. You also had off of another swing point, which was the September 19th swing point. You had a 1.272 expansion. That's going from the high of September 19th on the Nikkei. That's out at 92.8853 down to the low swing point. Its next swing point low, which was October 15th, out at 84.88 out there. Take that difference, multiply times 1.272, add it to the low swing point, and that will take you right up to the spot at the high on November 26th. That high, 94.87 out there. So you got two converging patterns coming together out here. It's a great place to go ahead and where your back is up against the wall. If you were trading the Nikkei, you would certainly want to be aware of that. Now, as far as pullbacks are concerned, really there's a couple different areas that you could use here. You can take a look at the larger 618 Gartley pattern. That's what I would first be looking at. And if you go from the swing point low out there, which was really our A point of an A to B equals CD up out here, at least 0.382 is the level you'd be looking for. That would take it to about 9,034. That's the red lines going across my screen out there. If we go ahead and take a look at the smaller butterfly pattern out here, the smaller butterfly pattern, I'll go ahead and I'll put those lines in black out there. You can see that the 618 level is around 88.71 or so. So it's quite a range out there, 88.71 to 9,034. But that's really the target. It's really going to be the candles that are going to be giving you the information, as well as what else may be going on around the world, and more importantly, what's going on with the Japanese yen U.S. dollar currency pair. So that's how you really want to be able to correlate things out there. That is on your Nikkei. If we go take a look at the indexes here, yesterday getting a reversal signal in the New York Stock Exchange, probably the most important of all of the indexes to really follow. Why? Because then you've got the market breadth. But more importantly, the New York Stock Exchange has been, just like in Germany, the DAX has been the strongest index in essence worldwide. That we really follow out here for any measure. The New York Stock Exchange has been way stronger than the NDX 100, way stronger than the S&P, the Dow, or the Russell 2000. And the reason I say that is just simply the level of the pullback as the market was moving down off of its highs. In this case here, on the New York Stock Exchange, moving down off of the highs from September 14th to the low of November 16th. November 16th, we saw a key reversal date. Key reversal date says that your high and low intraday needs to be higher than the, actually there was not a key reversal date on the New York Stock Exchange, so I take that back here on November 16th. However, let's go back to yesterday's action. You did get a key reversal date as the New York Stock Exchange was making a 0.618 retracement. That level was right at about the 82.50-ish level. Here, what you saw was the market moving up, key reversal date. Intraday, you had a high and low that engulfed the entire candle session, and you had a close that was going in the opposite direction of the trend out here. Also, it has to come in an extended condition. So, a 0.618 I consider to be somewhat extended. It would be really extended if you had the relative strength indicator up towards its highs. Hasn't made it up there, but we did get a key reversal day in the New York Stock Exchange. A lower close today will confirm that. What does that really set up here? I think what it just sets up right now is maybe just a normal pullback. And a normal pullback here on the New York Stock Exchange would be what? Sweet what? That's right, sweet 618, 8,016 or so. Really takes you back to where it gapped up on November 19th. That low, 8,002, the high, 8080. 877-927-6648. Give us a call, folks. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. We got the Dow up 12 points right now. S&P down 75 cent. Composite off $5.50. Russell 2000 down 95 cent. Microsoft up 6 pennies. Intel up 21 cents. Google down $3. Cisco up 7 pennies. Apple off $6 and change out there. Pop into the upside. You've got Big Lots. BIG is the ticker symbol. Up 8% here. Up $2. And change. Room 222, that's what it's up, and I suppose it's up on the announcement of a planned retirement transition for the CEO. Kind of hard to believe that that's what the celebration is all about. They did have earnings release out here. Looks like net sales of $1.1 billion versus $1.1. So sales really about the same. Net loss in Q3, $6 million versus $4 million, but they are having a nice day out here in the marketplace so far. The leader in the clubhouse dollar-wise on the way up. Behind them, Edwards Life Sciences. EW is the ticker symbol. They're up 2% here this morning. Let me see if there's any earnings. I don't see the earnings release out here. Francesca Holdings, that's a retailer. I believe that's a women's apparel retailer, up 6% here this morning, up $1.54. Toll Brothers having a good morning, up 3%, up $1 and just a little bit of change out there. That's all that's over $1 to the upside. To the downside, however, you've got Apple leading the charge. Dollar-wise, off $6. It's a little over 1%. Darden Restaurants warning about earnings per share. They are the Red Lobster, Olive Garden, sorry about that, restaurant, and Seasons 52, which is a great restaurant, by the way. DRI is the ticker symbol, off 9% here this morning. You've got Wynn Resorts, WYNN. They had a decent day yesterday. However, I believe they gave a reversal candle. We'll take a look at Wynn Resorts here. Off 4%, down $4.53. Stratasys, SSYS, one of the 3D printer companies, giving up yesterday with volume. So we'll go take a look at that. That could be coming a damaged stock out there. Too bad. So we'll go take a look at that. That's off 4% here. You've got down 44%. You've got Net1 UEPS Technology, and I do not see any news on that equity, at least crossing my screen. So we'll take a look at the hit being taken there. Tractor Supply, TSCO off 3% here this morning, down $3.26. Baidu off $2 and change. Again, our call number 877-927-6648. Let's go take a look at some of these stocks out here that are popping and dropping. Looks like driving the Dow up is IBM. It's up 59 cents, up about 0.3%. Let's start with Apple out here. Let's go see what Apple is doing. Apple, again, as we had talked about, Apple running into a bit of a supply line, which was the October 26th level. The low there was 591. There was 36 million shares. As Apple hit that on November 29th, did it with 18 million shares, not enough to bust it up. Tried again yesterday, only 13 million shares. Can't bust it up through there. Apple beginning to retrace here. Apple should come back all the way to the lows of November 19th out there, 539.88 and change. And that would be actually, you know, it's got, and Apple's got a hammer candle down on the November 16th level. So the first first target's going to be the 0.382, 580.44. If it works its way through that, and you'd like to see it coming down into that area with more than 29 million. Well, it depends if you're bullish or bearish. If you're either way, you want to pay attention as it gets into the price level of 567.50-ish, and you want to see it doing well. If you're bullish, you want to see it coming in there with lighter than 29 million shares, and if you're bearish, you want to see it coming in with more volume, accelerated volume, as it makes its move down to that level. Let's go take a look at, let's see, Wynn Resorts. I mentioned Wynn Resorts was trading lower this morning. Let's go take a look at Wynn yesterday. Wynn giving you a shooting star candle as it was testing a area. Now we have a tested window out here. That window that we're taking a look at is the November 5th area. We'll draw the line across the screen out here. That is where it had gapped down. Now, the session before that, on November 2nd, you had Wynn Resorts made a high of 123.54, made a bearish engulfing candle up there, closes out that session at 120.80, 1.8 million shares. Next trading session over the weekend on a Monday, it opens up down. Well, it doesn't open up. It opens down, I should say. Opens down. The open was at 114 even. Trades all the way to a low of 111.52. I'm sorry, trades all the way to a low of 110.80. Closes at 111.52. Does it on 2.1 million shares. That is the area where it ran into yesterday. 2.1 million shares. That's what it did on the gap down yesterday. Only 1.3 million shares. Also giving you a reversal candle out there. That area is an area of tested resistance. Now, you like to see an area of resistance tested more than one time out there. Gapping down this morning. Volume here is 458,000 shares. Looks like it will want to make its way down to the November 15th lows out there. That would take into 103.34 to 105.61. That is on Wynn Resorts. Let's go take a look at the Big Lots. BIG is the ticker symbol out there. Gapping up this morning. Oh, okay, let's go take a look at what this is doing here. Let's just refresh my screen. This Big Lot showing you many signs of selling out here. Institutional selling for sure. The first sign was going all the way back to March 28, 2012 out there. Let's just blow this up on the screen here so you can follow along, easier to take a look at. So it forms its first bearish candle on the 28th of March, made a high the prior session with 1.7 million shares. That high out there was 47.22. Then all of a sudden you see some selling, 4.5 million shares coming out of it. What does Big Lots do? Goes back and tests the open gap out there. That had 1.4 million shares. It tests it on the 20th of April with 1 million shares. So 1 million going against 1.4. So that's light by what, about 40% or so. And then, boom, the air comes out of it. You have markdown taking place on April the 24th out here, moving down with 13 million shares, going from $45 and change all the way down to $34 and change out there. That is a whopper of a move down. As it makes a move back up, it cannot get back to the area where it broke down. That was made its next high on August 7th of 2012. And then, boom, more markdown. This is like holiday shopping out here at Big Lots, only if you own the stock, not the type of holiday shopping and markdown you like to see after the end of the holiday season. On August the 23rd, 16 million shares come out of it. Again, it had traded all the way back up into the $42 level, and then on August the 23rd, down to $29 and change. That is another stinger out here. Do not get in the way of this equity whatsoever. This has got nothing but damage out there, damage extraordinaire. Looks like, it's got a resistance area probably here, which was November 6th. The high there was 31.72. The low of that candle, 30.60, 980,000 shares so far today, 1.4 million shares. That is where she is headed, but really it's going to have this resistance here. We'll draw the line. That was where you saw that last sign of markdown. That's how quickly stocks can mark themselves down. So when you start seeing institutional selling out there, folks, you want to get out of the way. The August 23rd downdraft, that high is 32.40. That is likely where Big Lots is headed. It's trading at $30.13 right now. Let's go take a look at Vail Resorts. That is trading at $4.65 here this morning. Let's go see what they've got. Net revenue 116.3 versus 116.3 last year. Their loss here, let's see here. Loss, I've got the loss per share, $1.70 versus $1.54. The ticker symbol on Vail Resorts, MTN, is the ticker symbol. What a beautiful place for sure. If you haven't had the chance to experience getting up to the top of a mountain and looking back, even if you don't ski, you should do it. That's one of those experiences that everyone should have out there. And Vail's not a bad place to do it at, or you can go a little bit further down the street. But plenty of spots out in Colorado to do that. You've got Vail taking out a swing point. That swing point low is November 15th out there. That low is 51.37, 139,000 shares so far today as it gaps down 168,000 shares. So this here making an A to B equals CD down. This did have a sign of strength here, but that has been so much for that sign of strength. Now, that sign of strength out here was on September 25th, 1.6 million shares to the upside. That candle also where it moved up from September 24th, trading below that area. So as we take a look at it, this is really going to start forming a resistance level right about there, which I would say is, could be the low of September 24th out there. And it looks like Vail here wants to try to make an A to B equals CD down. That would look, we'll just do it from here. That A to B equals CD down would take it down to probably about $47.05. The one-to-one is $49.18. I do see another small sign of strength out here that was tested, that held. As we take a look at that, that's going to be the area where it gapped up on June 28th. So if we take a look at the June 28th gap and I run the line across the screen out here, you can see that that area was tested on July 12th. That was 114,000 shares going against 204. That is an area of support out here. Of course, Vail trying to prove more, MTM, Vail Resorts, trying to prove me wrong and really just move up to the area where it has broken down. Let's go take a look at, let me go see what's moving here in the Dow. The Dow's up 38 points. You got a lot of green out there in the Dow. Weakness in the Dow is McDonald's, Home Depot, Verizon, AT&T, Procter & Gamble, and Disney. Moving to the upside is IBM. So IBM being the number one weighted holding inside the Dow. So let's go see what IBM is doing here this morning. Let's see, I know I've got that stock chart out here. And then we're going to go ahead and pull up, there we go, I've got the IBM monthly chart out here. Let's go ahead and put this on a daily, see what she is doing here this morning. So as we put this on a daily, you've got IBM up 78 cents. Not really a big deal out here. You can see it moved down yesterday, coming down into the area where it was. Well, let's pull this back here. Let's see what IBM actually has done. Now, what we're going to do, folks, we're going to take a look at the last time that IBM gapped up. That's going to be the November 19th date. We're going to draw the line across the screen here because this is important. That low was 188.30, 3.5, the low of the gap up is what I should say. So we're taking a look at the November 19th candle out there. The low is 183.30, 3.5 million shares. The very next day, it tests that area, gets down to 188.25, 3.1 million shares. Yesterday, comes back and tests that area with 3.3 million shares. So 3.3 going against 3.5. Yesterday, getting down to 186.30, 188.36, 188.36, testing 188.30. And so that area has held as a support area. So IBM really trying to fight off all of the sellers in the stock. It does look to me like where IBM really wants to head down to is the gap of January 20th, that high, 188.97. Apple right now, or IBM just having an inside day out there. Let's go take a look here at Walmart and a couple other ones. Walmart, because we have the monthly chart out here. Yesterday was the beginning of the trading month, and Walmart on the monthly chart did reject. So it did do the old crack and snap. It tried to crack back into the consolidation pattern that had been around since December 31st, 1999. The high there was $70.25. The volume was 137 million shares. It certainly broke through that with conviction with 210 million shares on July 31st out there. What Walmart did was it tried to get back inside there during the month of November, failed to do that, and we'll see if it tries to break down in there. So the buy point on Walmart, most certainly here, especially from a longer-term holding standpoint, would be right around $70.25. You wouldn't have to have much of a stop there. And again, you'd be looking at this for more of a longer-term holding out there. If you get a close below $70.25, it says, hey, Walmart may want to run all the way back down to the bottom of its consolidation range. But so far, not a false break topside. You got to be careful, though. The stock did give you a bearish engulfing candle last month. That was after making a high in October with 144,000 shares. That high was $77.60. So 144 during that month, 193 last month. You want to see this thing prove itself again for you. Stay tuned, folks. We're going to come into our next segment here, but Basil Chapman and I are going to be doing the Money Masters show while real estate Tom is out purchasing homes. If you haven't had a chance, folks, go to the homepage of TFNN.com. Click on the white paper, the bull market in housing. Also, Basil's got a master trader course we'll talk about during the segment during the next show when the Money Masters show. Also, while you're over there, if you have not had a chance to test drive my newsletter, you'll see underneath breaking news, real easy to click on. You can test drive that, folks. 30 days, unconditional money-back guarantee, 877-927-6648. We've got the Dow up 30 points right now, composite off 5, small caps up a point, S&P totally flat. We'll be right back.
Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. The Dow up 34 points right now. S&P up 1. Composite down 2.5. Russell up 1.5 here right now. The NDX 100 down 3. And as we take a look at Darden Restaurants, DRI is the ticker symbol. That is the home of Red Lobster and the Olive Garden and a few others, Smoky Bones, I believe, as well as the Seasons 52 out there. Getting hammered here this morning with volume, forming, completing, or what's the word I want? Well, gosh, I don't. Confirming, thank you, there we go. Confirming an A to B equals CD down. Doing that out here by crossing the B point this morning with volume, gapping down. So let's take a look at the B point of an A to B equals CD down. The B point on this is going to be your low of November 16th out here. That low was $50, even 992,000 shares. You can see here this morning gapping down, already doing 2.7 million shares in only 25 minutes of trading. Your A point on this is going to be the high out here from September the 21st. That high was $57.93, 3.7 million, almost a island reversal candle. It was not, though. A to B, 1-to-1, A to B equals CD down would take it to $46.28. It really wants lower price out there. The next levels are 44.13 and then 41.39. 41.39 has got some pretty decent support out there. You got to take this one day at a time, but exploding off of the C point here this morning. They are indicating, let's see, what exactly did they say out here to spook the stock? Just simply that they are guiding below estimates. They are now seeing, which is kind of interesting. Usually it should be a pretty steady restaurant out there. Says they're seeing their Q2 EPS somewhere between 25 to 26, revising downward as well for their fiscal year 2013 level out here. So that's kind of an interesting clue out there. That was on Darden Restaurants. Let's see, what else do we have here? Let's go take a look at Tractor Supply. TSCO is the ticker symbol. They're down 4% here this morning. TSCO. See what kind of volume is behind that move. So gapping down, looks like taking out a swing point here, coming into an area that is a sign of strength. So let's get rid of this. Tractor Supply has sold some institutional selling a couple of different times. The first time was back in May of 2012, May 29, 2012, when you had some volume off of the top 4.5 million shares. So now what you've got is Tractor Supply taking on the swing point, which was November 15th. That was a low of 85.86, 768,000 shares. Taking that on so far 342,000 shares here this morning. Looks like Tractor Supply making an A to B equals CD down here. That should take it back all the way to the swing point. Lows around $74 back to July 18th. It does have a decent sign of strength here, which is it gapped up on the 26th of July with 4 million shares. So today's volume will give you a pretty good signal on Tractor Supply and where it wants to head to. Stay tuned again, folks. Today we've got Basil Chapman and myself doing the Money Master Show. Then Basil will do his normal hour from 11 to 12. 12 to 1 is Victor Jones and Daryl Martin 1 to 2. David White 2 to 3. Ken Shreve 3 to 4. And the Tom O'Brien Show from 4 to 6. Folks, remember this. Your mind, folks, your mind. You want to occupy it with positive thoughts. You know, a beautiful garden out there. You want to go ahead and get rid of those weeds, those negative weeds out there, and have a beautiful garden. Hopefully that plants a seed for you, a beautiful seed. Thanks for being here. Stay tuned for Basil and I if you're off to start your day. Safe travels. We'll look forward to seeing you tomorrow. Take care, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.